So on Monday, the US dollar dropped to its lowest since mid-January at 101.85, driven by a stronger Japanese yen and expectations of a federal rate cut in September. The comments from San Francisco Fed President Mary Daly suggesting a gradual approach to lowering rates, adding to the dollar's weakness. A positive stock market reduced demand for the dollar as a safe haven, though weak crude oil prices might limit further decline. Investors are watching for Chairman Jerome Powell's upcoming speech at the Jackson Hole for more guidance. For the technical analysis here, the dollar index is trending weak and sideways with a deep consolidation in the negative territory, and the RSI is around 32 near oversold levels, and the MACD is showing weak momentum. Despite last week's gain, the outlook remains bearish. So in the short term, the index is trading between 101.34 and 102.87 with the key support at 101.34 and the resistance is at 102.87 and 103. And then for Monday, the WTI crude oil prices fell for the second day, dropping below $77. Concerns about weakening demand from China, the top oil importer, are weighing on the market. However, geopolitical tensions in the Middle East and potential interest rate cuts by the Federal Reserve could limit further rate cuts. For the technical analysis, we can see here that it is facing downward pressure, falling below the key resistance at 78.13 and 78.14. The 14-day RSI is showing a bearish trend. In the short term, prices may test support at 75.08 and $73.48. On the upside, breaking above 28.13 could lead to a test of $80 level. And then next, for the gold price, it surged 2,500 last week, reaching a record high of $2,510. This rise was fueled by a weaker US dollar, falling yields, and the hope of Federal Reserve rate cuts in September. So the geopolitical risk from the Middle East and the Russia-Ukraine war also boosted the demand for gold as a safe haven asset. However, easing recession fears in the US have slightly pressured prices, leading traders to wait for more clues from the Federal Reserve before making any further moves. For technical analysis, it broke out above the 2,470 to 2,472 resistance, and the previous high of 2,483.7 signals strong bullish momentum. Technical indicators remain positive, suggesting more upside positive potential. If the prices hold above the 2,510, the next target could be $2,514 and $2,548. However, the failure to sustain 2,500 could lead to a pullback with support around 2,472 to 2,470. And then lastly, the AUD/USD continued its strong uptrend, reclaiming the key 0.67 mark and hitting 5-week high. The pair opened strong at around 0.6668 on Monday, supported by a weaker US dollar amid expectations of a Fed rate cut. This week, the focus is on the Reserve Bank of Australia minutes and Fed Jerome Powell's speech at the Jackson Hole, which would influence the market sentiment. For a technical analysis here, we can see that it is expected to maintain its upward trend. The 14-day RSI is around 60, signaling bullish momentum. Key support is around 0.6622 to 0.6625, with a resistance at 0.6755. If the pair breaks above this level, it could target 0.68 mark. Conversely, a drop below 0.6622 might lead to a test of 0.66 or lower. And that is all for today's analysis. Thank you for watching and happy trading.